Afternoon, everybody. I'm live on YouTube in the virtual trading floor. 12 after 4, 2 minutes late. Let's get it. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRECIPIC. All of my trades are placed through T3 Trading Group, and you should carefully consider whether trading is suitable for you in light of your own financial condition. Since the last afternoon meeting here, I bought a little bit of pins and a little bit of NVIDIA, which I'm still involved in. Let's go to the charts. All right, so another negative day here today. Go over the daily chart to begin. SPY's down 0.7%, Q's off about a full percentage point, Russell down 0.5%. So once again, a little bit of relative strength in the Russell. I do always think that is notable. We've consistently seen the IWM be a leader in this calendar year, so no new real lows there. Have a daily chart that SPY's up currently. So we got basically a day 2 to the downside. Maybe you can argue it's a day 3 if you want to include Thursday of last week. Thursday of last week was really just kind of an inside trading session where we closed on lows. So it was really kind of 2 days in a row here of what I would describe as kind of more legitimate selling, where depending on which index you're looking at or which stock you're looking at, we potentially tested or broke or maybe didn't test year lows. So the SPYs, which I have up right now, SPYs at the low today, held by, we didn't get new lows on an intraday basis in the SPYs by like 60 cents today, and we managed to rally a little bit off of lows. So we do not have new year lows in the SPYs. The Qs have that though. Qs here, we've got new year lows. We are below the June low. We are below the September low. The September low from that Friday, we closed around 267 quarter, and today we closed at 266.62. So new year lows for the Qs. And then the one thing that, if you're trying to find any bullish narrative in the technicals or fundamentals at all with this marker right now, it would be to point towards the IWM. Again, Russell here has just kind of been a continued leader for this year. The Russell did not make new year lows in September when the S&P and the NASDAQ did, and once again is showing a little bit of relative strength on this most recent pullback to still be decently above the September lows at this new low here for October that we saw today. So that's kind of the one notable thing there as far as any relative strength goes. As far as like the daily candle goes today, I really wanted to see if we could get, we had that little bit of an afternoon rally, or even more so, we had a little bit of an afternoon sell-off in the VIX. VIX rolled over really hard, and then at around 3:20 today, basically retested the opening low. And I noted that as the VIXy here was retesting the opening low at 3:20, at the market, you type up the SPYs, 3:20, nowhere close, right? SPYs were kind of rallying up to 362 at that point, but they're still $2 away from their highs. So I kind of felt like either the VIX was going to have to give a bounce into the close, or the market was going to have to give a bounce into the close. And it turned out to be the VIX. I really wanted to see if this UVIXy today could close with some sort of opening shooting star into new recent highs here on a third day up. That could be a signal that this needs to pull back, and therefore that the market could give a little bit of a further bounce. I know that there's some chatter of a very small time frame double bottom here. The flip side of that is you could be pointing and trying to say that this is like a double bottom compared to the September lows. Personally, I think it looks more like what we call an H pattern, which basically looks like the lowercase h, which is a trend continuation pattern. We'll only really know that for sure, I guess, when we see that this low is holding and we break back up, or this low fails to hold and we get kind of downside continuation. But if we really start breaking below the lows from Friday, the Friday September 30th, your technical measured move here is going to be another $25 down from this break of 355. So what's that going to bring you down to 330 in the SPYs, which is like the same level that a lot of Wall Street bank analysts, sell-side analysts are saying is kind of a fundamental target that they have in the market. It's also the same, I'm trying to remember where that. I remember we were talking about this bear flag coming in. When this bear flag was building out, which actually was a failed pattern, which we called and looked for here as a team, by the way. When this bear flag was setting up, we were discussing on a real breakdown. You have a similar price target to that as far as your big picture technicals go. 325, 330 in the spies on the downside. So there's a lot of things here, technically, fundamentally that are not looking good. This TLT has just been an absolute massacre. I know we discussed, I think early last week, this bearish wedge pattern that was building up into the TLT. We discussed that maybe this candle here on October 5th could be like a false breakdown if this tail leads to a quick snapback. It was not that. It was just a little pause in time before continuation lower. The biggest thing about treasuries and interest rates, and interesting to get this move in the TLT today, considering that the bond market was actually closed for Columbus Day, Indigenous Peoples Day. Obviously, the European bond markets were open. The biggest thing about the move here in treasuries and in interest rates is not just that interest rates are changing, but it's the rate of change. Just how fast this TLT is sold off, how fast interest rates have gone up. Obviously, for the traditional 60-40 portfolio investor, it's just been an absolute bloodbath. But it's the rate of increase on interest rates, I think, becomes more concerning than anything when you point to, and now everybody on CNBC is talking about it, the potential of kind of breaking something in the system. So we'll see if that happens or not as we approach earnings season. Earnings season is going to be kicking off on Friday with the banks. So that's going to be interesting to see. There's been a lot of analysts, I think, revisions to the downside coming into this earnings season. So we'll see if it's similar at all to the last earnings season. I remember going into last earnings season, I felt that expectations were so low for that earnings season, and what that led to, which we kind of predicted this going into into earnings season, was that a lot of companies that were missing on reports were not getting as brutalized as badly as they would kind of in other markets, just because expectations were so low going in. Everybody thought that everybody was gonna miss on every report, and then when it actually happened, since it's already kind of priced into expectations to some degree, it wasn't kind of the end of the world. But we'll see. There were also a lot of people going into the last earnings season talking about how we'll start to really see the recession rear its ugly head in that season's reports, and it didn't really happen. And those same people are pointing to basically the same thing coming into this report. Into this earnings season. So it's going to be a really interesting earnings season that we're coming into. That's on top of the fact that we've got, I think, PPI on Wednesday, CPI on Thursday. So we've got a lot to look forward to as far as macro catalysts for this market, and then micro catalysts for this market as we go into earnings season. But at least for the moment, these technicals are looking terrible. And coming into today, and I missed kind of our opening meeting today and research because I was had a little doctor's appointment this morning. Looked like Pat did a great job, and I was following along with my research as best as I could. So I missed the open, but there was certainly room for further downside action today. If you look at like that short-term tactical sentiment indicator that I like to pay attention to just for, opening strategy on how we're gapping and a thought process, like that was not even in the buy zone, even after the price action we saw on Friday. So Friday's candle here, this candle on this little pickup in volume, kind of a negative Maribozu. We almost closed at lows, just a very bearish candle, and really gave no reason to expect that we could bounce today. We're not that extended on pretty much any metric after this really solid bounce back that we had to that 380 area that we had been discussing, which at this point is looking like the next lower high in this kind of severe downtrend that we've been in. So we'll take a look at that again tomorrow. Again, the one thing I was just kind of talking about this that I wanted to see was just if that UVIXI could close with a real big shooting star. And we got a little bit of a tail there. We have a little bit of a smaller body. You can point to that being a shooting star. I wanted a lower close today in this. I wanted this to close certainly below 13. I wanted to close it the opening price or lower, and that would have been something that could give me a little bit more confidence that this market could bounce a little bit better. And in conjunction with that, If you're looking for a double bottom here, you wanted to see that UVixie close at lows. You wanted to see the SPYs have a decent close as well, and they just didn't have it just didn't come in. I think we saw some general, not too big, but some general market on close sell imbalances that were kind of coming into the end of the day today. And last 5-minute bar here was ugly. Again, just at 320, I was really wondering, wow, could UVixie close at lows? Could we snap up here through 362 and give a okay close here for the SPYs that give a little bit of a downside tail? And we just didn't get it. We just didn't get it at all. So this market looks like trash. We're a little bit extended to the downside after today, but we're not so extended that we can't continue. SPYs are at 360 with the ADMA at 368, let's just call it. So you got $7-8 worth of extension. We've consistently seen in this market environment that it's only when the SPYs are getting definitely more than $10, maybe more like $15 away from their ADMA on the downside, and all those sentiment indicators that we like to look at, or when they're all kind of screaming by at the same time. And you have that degree of downside extension, that's been where the good counter trend trades have really come in, that have led to really strong bounces in the market. We do have sentiment and positioning. They're terrible, and rightly so. So it is worth keeping in the back of your mind that should we get some sort of catalyst, whether it's technical or fundamental, that leads to upside price action, that upside price action could very quickly become like a virtuous cycle of buying, and it could be face ripping to the upside, and we want to be able to take advantage of that. But otherwise, for now, the market technicals look like trash, and maybe the PPI CPI Wednesday Thursday events going into earnings season could be the thing that, well, we'll see what happens. It could be the thing that changes it. That could be the fundamental change that leads to that virtuous cycle of buying that I was just talking about, or it could just be the next ball to drop in what has been a terrible market. So once again, these inflation numbers that are going to be coming out this week are just going to be massive. As far as the trading goes today, again, I unfortunately missed the open. Looks like we had a little bit of a common gap to the upside. The common gap was sellable. Generally, in a bearish market, when you get just a standard common or area gap to the upside, they have very high probabilities of being filled. And again, not extended at all here on the daily chart to think that you can't come in and attempt to short the open. But pretty much, it wasn't a huge gap, so within probably 7 minutes or so, that gap was filled. We got some downside continuation. Still not exactly sure what happened here at like 10:25, 10:30, where we got that little bounce and then rip back lower. I could just be overinterpreting the price action. It could just be the low liquidity environment that we're in. A little bit of a bounce got overshot and just led to continuation of the weakness. The one good spot that we really had today was pretty much at lows. Pat posted that Germany backstopping debt related to energy piece of information that led to this rip higher. And then as that bounce was happening, and again, that was right at lows, and it was called out really well. Right as that bounce was happening, we literally said here at 110 as the bar was forming that you could look to be long versus these lows. It was a really good call out. As we kind of continued higher here, the next leg was brought on by another headline that came out of Russia saying that they're willing to negotiate or whatever. But we've seen that. I mean, how many times have we seen the Russia is willing to negotiate headline over the course of the last, 8 months or whatever since the war started? It's happened a lot. But it was enough, when you already had upside price action coming in and the market was breaking 360 to give a little bit of a further boost here as we got back above 360 on that headline. And then that just kind of faded into nothing. As we pulled back here, I think it was like right as this candle was coming in at 215, I said into the virtual trading floor, if the bulls are going to do anything with this bounce, we need a pivot now. And within 5 minutes, the market attempted to make that pivot, but no new highs came in. So this little catalyst or double catalyst, fundamental technical here coming into play at the same time, just was unable to give any real follow through. It seems like this market is pretty much entirely devoid of buyers, and it almost seems like not only are there no buyers, but even when you get a little bit of a bounce like this off of that news, it just seems like some short profit covering coming in more than actual new real long buying coming into the market. And once those shorts, get out kind of based on whatever that news event was, there's no new buying that's coming in, and leading to an uptrend and leading to further rally. So again, just kind of just further things here that point to the bearishness of the market. On the long side of the market, though, I mean, there was some decent relative strength in a few select names out there that we were identifying that led to some okay trades if you were able to kind of capture them. One was this relative strength in Apple, just notable, right? Market here you can see is just continuing to break lows, post 1040, 1045, and obviously new lows again at 1 o'clock. Apple never did that. Apple showed really good relative strength. This was one of the first names I highlighted when I got to the desk after my doctor's appointment, was that the relative strength even in here as something you could look to go long off of. I'm not sure if anybody really caught that or not, but again, relative strength and relative weakness is just one of our really important layers of probability that you want to pay attention to. So that was Apple. Netflix was another one that was showing a good amount of relative strength, held its opening low all day, was green all day. I still really like this holding pattern that Netflix has been in on the daily chart. Spoken about it a number of times. If you just compare Netflix in September versus the market in September, it's very obvious that the relative strength is there. This is the true leader in streaming, and the stock's been holding in great, but it's also been unable to break out. And you could point to that just kind of being market related, but overall it's hard not to like Netflix when it's been so relatively strong, so consistently for a month and a half, and that really included today as well. Not quite an inside day for Netflix, but potentially we could look at Netflix long if the market's giving us anything to bite onto tomorrow, like above the highs from today or above the highs from Friday. So that's Netflix. Airbnb is another one that I was looking at for relative strength. This Airbnb is very tricky. I'm in it. I'm a big fan of the company. I really like what they do. I've been bullish on the stock and have a position currently. This was trading so well here in the beginning of the day. This is another one that I highlighted right away as soon as I got kind of back to the desk around 10. It's also very thin. It's very liquid. And it's important to understand your liquidity. And I have also seen with this stock many times that when it hits a spot where stops are getting triggered, that it can flush, pretty violently just because of how thin the stock trades. So unfortunately, this was looking great early on, and then when it started to lose some of these pivots here on the way down with the market weakness, when the market made its 1 p.m. lows, that just led to Airbnb breaking all these pivots and was very difficult. And then immediately, once it basically probably got done stopping everybody out, beautiful looking doji here on a volume increase at 1 o'clock. This is exactly the type of execution stuff we generally want to be looking for. A relatively strong name, getting extended to the downside, volume picking up, giving a hammer doji type of situation here, and then leading to amazing upside follow through to then eventually break highs and close really well. This Airbnb is sloppy on the daily chart. It's maybe starting to build out a little bit of a wedge here. But overall, I think that this relative strength that this one has shown as well over the course of the last month or so, which was again highlighted today, means it's another symbol that we can continue to kind of pay attention to in the future here, these next few days, if the market ever does give a long setup. Otherwise, if the market doesn't ever cooperate, relative strength is a really important layer of probability, and probably means that maybe this is not the best stock to short. But there's only for so long that your relatively strong stock can hold up until the market eventually catches up to it. So some decent opening relative strength. I remember seeing Peloton, getting some chatter from you guys pre-market in the morning meeting for off the open. This one looks like it gave a strong opening drive which led to a 100% failure. Worth just highlighting because we've spoken about this in the past. If you get one of these great opening momentum trades that gives a retracement that's in excess of 100% of the initial move on with your day. Don't go back to it. The probability of a new high coming in at that point usually is extremely low. And this thing actually rallied pretty well into the close. This Peloton's kind of been on my radar a little bit ever since those comments from the CEO came out. I forget, it was probably on this day when the volume came back in. I think it was actually. I think we called it along here on October 4th on some news. The volume came in that day. It was a good trade. It's kind of just been building out this bullish consolidation. I don't like calling this a bull flag. A bull flag is a trend continuation pattern. There's no uptrend here that's leading to this consolidation. It's just up and sideways. So that's the difference in my mind between what I would call a bullish consolidation and a bull flag. A bull flag is better. But this is a good start for Peloton, given what the market was able to do, and maybe there's another one that we can keep on our radar, just as a trading vehicle. Hard to fall in love with this thing, but I do think that it has buyout potential at these prices. And I remember there being chatter, Amazon, Nike. That was all the way back. That was all the way back when the stock was still at 30, and now it's trading at $9. So potential fire sale in Peloton at some point. We'll see. And then the only other one I really noted that you guys were chatting about this morning was Rivian as a short. So I think a couple people were involved in this. I was looking off the open momentum trade here for Rivian. Seems like it was actually a tricky trade, at least based on kind of my rule set for trading on entering. But if anybody caught that, not bad. I don't know. This Rivian, they're recalling every car that they ever made. And I've been in a Rivian, and I thought that the car was actually awesome. But just because I like the product doesn't mean I like the company. This company is going to take forever to be able to become profitable. And, you're kind of relying on Jeff Bezos having a midlife crisis and wanting to continue to compete with Elon Musk in order for this company to be able to continue. But the truck is super cool. I would like to get one maybe at some point. So that is all I've got for you guys for this Monday. I am happy to answer any questions that anybody has. If there's anything in YouTube, I don't have the YouTube up. If someone's able to copy and paste it into the VTF, I would appreciate it. Mark's saying I think everybody is waiting for Thursday and expects Tuesday and Wednesday to be a little bit boring. Yeah, could be. We'll see what happens with the PPI on Wednesday. We've seen that be market moving a little bit. It's definitely a real chance that we just go into wait and see mode here tomorrow. Today wasn't super boring. Usually today's a really boring day, and maybe it was a little bit boring, but it wasn't like we flatlined all day. Columbus Day, where the bond market's closed, a lot of times this is just a super, super boring day for us. And, there was some price action today, so not terrible, but we might just have to wait at this point. No particular question, just curious for thoughts on Rivian. Yeah, so just chatted about Rivian. Again, fundamentally, just kind of blows my mind that this company's even able to become a company in a world now where interest rates are increasing, considering that these guys are, my understanding is that they're going to have to just consistently take losses year over year for probably at least the next 10 years to achieve what they want to be able to achieve, which is, getting their car to market in a bigger way, obviously, but they also want to build out like an entire, massive network of kind of their, for lack of a better term, gas stations throughout the United States. And it's just going to take billions and billions of dollars to be able to do that. They're going to be taking a loss for a long time. And the market has just been massively punishing companies that don't have, at least, that are at least providing a path to profitability in a reasonable time frame at this point, given the interest rate situation. So that has kind of made me bearish on Rivian pretty much from the beginning. I know we had that insane rip early on. I think I shorted this thing at like $180 on that day. Obviously, didn't hold it. But it's been on the radar ever since. It's certainly an interesting company. And again, the flip side is I think that the car is super cool, and they've certainly got the right backers. But you're telling me you're having to recall every car that you ever made? How is this thing only down 7% today? Interesting. So I don't know. For an opening drive momentum short, I see the trade. I see why you guys were looking at it. But it only closed down 7%. It closed down a little bit of a tail. I would think it needs to be down more. And that kind of goes back to what I was just saying a little bit earlier in the afternoon meeting here as we come into this earnings season. One of the things to pay attention to in this earnings season, same exact thing as last earnings season, is when bad news hits and stocks are not going down as much as they should be. And you might be able to throw Rivian as a case study in there. down 7.5% when they're recalling every single car that they've ever made. I know that if this was before the summer started, you're talking about at least a 20% down move on that. At least a 20% down move on that. So this seems like it's a little bit muted. AMD obviously has continued to get trashed, but the initial reaction on AMD off of the warning Thursday after hours wasn't terrible. And speaking of AMD, Pat pointed out the potential of like a Morningstar Doji type of situation coming in here today as it gets extended below $60. We'll see if that can create some sort of pivot and begin to work its way back up. So that's basically the extent of my thoughts on Rivian. I don't have too much else for you. Since I'm talking about AMD, I see Dalek here is also asking about NVIDIA. Yeah, look, I'm watching this NVIDIA. NVIDIA breaking $120 is certainly not good. It is certainly not good. This entire move is so crazy when you really scroll out and look at some of these stocks on the upside and on the downside. It didn't close like I wanted it to. This NVIDIA I was really looking at today. I got some good stock in it. I'm keeping it long overnight, even though I don't love what the daily candle is showing me. The one thing that I liked on an intraday basis, going back to relative strength, you want to learn to be able to see relative strength, relative weakness on multiple time frames. So I remember noting at 1 o'clock that this did not make new lows. And it seemed like AMD was also holding up better at that time as well. I was like, okay, maybe these semis can improve a little bit. And by the way, the semis improving is something that if you're bullish on the market, you really need. We already mentioned the overall relative strength in the IWM as being like probably the only thing that bulls can point to at this point. Semis have really been the other, really leading sector this year. This SMH looks like trash. It looks really, really bad. These names, AMD, today's candle is actually interesting. If it becomes some sort of Morningstar Doji or whatever, if it reverses back up. NVIDIA lost that 120 support today. It did not close well. Look at Intel. This descending channel in Intel is really mind-boggling. Intel here had this massive support, which I remember trading off of this support in like 2019, I think, before COVID was even a thing, when it was support from these other areas. I think I bought like this dip here in 2019 and made a little bit of change for myself on it. This had massive support here in Intel at this $43, mid 40s, mid to low 40s for a really long time. It broke it here this year. I mean, you want to compare stocks to like their COVID lows. I mean, forget about it with this Intel. It's insane. Yet Intel is still, I don't know, just a case in point, though I'm just one person with one situation. I bought that, expensive laptop that got stolen in Spain, and it had an AMD processor, and I really didn't like how it ran the trading software. That was like the one thing I was trying to remind myself when my laptop got stolen was, well, this stinks and it was expensive, but you hated the computer anyway. And it was because it had an AMD, according to the tech team here at T3, the problem was the AMD processor. And the one tech guy was like, yeah, I always really recommend that everybody gets Intel processors for their Windows-based computer to run the trading software. And I was like, oh, okay. So whatever, it's just an anecdotal story, but I do love paying attention to the world around me because it can give you a thesis for the market. It's one of the things I talk about a lot. But wow, the degree of selling here on this Intel, this descending channel here, it's just getting crazy for this type of company to be able to continue to sell like that. So, I think that stock sell looks terrible. I do not think that NVIDIA looks good below $120 here, though one maybe thing to point to is a little bit of a higher low at 1 o'clock. But you're reaching if you're hanging your hat on that, which I guess I am because I'm long it. And maybe this AMD can give a little bit of a bounce back as well. I don't know, guys. Kind of grasping at thin air here to look for a bull case in some of these semis at this point, unless they can recapture their levels. Prove to me that you can recapture your level. Show me NVIDIA getting back above $120, and there's maybe something that we can bite onto. This AMD, show me that AMD can negate the negative Marabozum from Friday, and then maybe you're proving yourself, and there's something that we can actually begin to bite onto. Show me that Google can get back above $100. And Google, by the way, is another one that I was pointing to today. It got some institutional bullish option flow that came in. I actually thought that this Google held it pretty well, and I think it's notable, this Google low here in October versus this Google low in September, when you look at the Q low here in October versus the Q low in September. So this Google is on my radar, and it's going to stay on my radar. In any world where this market bounces, Google could be another one. But same thing. Prove to me that you're getting above $100. I don't need to be a hero by buying the bottom tick in AMD or NVIDIA or whatever after this NVIDIA is like broken $120 support. I don't need to be that hero. I could buy, if we're gonna come into, let's just say, I don't know, tomorrow is the absolute bottom of the bear market, and we start going up from here. And I'm just that's not a call or a prediction. It's just something I'm saying just to kind of present a case study, I guess. If this becomes the absolute bottom for the market, whatever, and over time here, NVIDIA works its way back up to $180, $200, maybe $250 over the course of the next year or whatever, as the absolute bottom came in today, I don't need to say that I bought $114.08 to be able to make money on it. I could be long on the break back above 120 as the stock proves itself that it was able to get back above the level and still be able to make plenty of money for myself on doing that. So I don't know. I don't think that these semis look good outside of maybe that AMD is showing that it can create some sort of pivot. But let these stocks prove it to you, and then we can try to bite into longs with more size. And same thing on. I've made the majority of any money that I've made this year in the March rally and in the July-August rally. Pretty much everything I've made this year has been in the March rally and in the July and August rally, because I called them at the lows, I was heavy, had the right game plan, I was super greedy, and I did really, really well with it. I don't need to be a hero buying the exact bottom. I just need to understand where the market dynamics are, and when the signals actually come in, to not be afraid to break the levels and have a game plan and understand my risk on the downside and my reward on the upside. That's on the long side. Not to mention that you can be making money on the short side. And I've made money on the short side, just not as much. We on the flip side, like pretty much perfectly called out this top here in August. For me, I think I only held my shorts to about this point and missed pretty much the rest of the move at this point. If you followed my rules, which I should have done a better job following my own rules, you could still be in that market short that we called out from the top as we approach the 200 days, we approach all those resistance levels. Again, just go back to the afternoon meetings in August and we rewatch what we were looking at in real time to be able to learn what we're looking at, to be able to pick those points. And it just doesn't feel like it's here yet. Again, unless something changes big time on CPI, PPI, it just doesn't really feel like it's here yet. We need a catalyst that can set off that next kind of wave of reactions. Anyway, from Sebastian, can I do a quick recap on Friday's trading session? Like, what was the team's game plan, and what stocks were you guys focusing on? Sebastian, it's been a long time since Friday, and I'm getting old, but sure. Boy, Friday was a really ruthless day with that gap down, and I remember off the open pointing to mixed signals for the market, because the SPYs had a technical breakaway gap to the downside. So that's a potential gap and go situation, right? A breakaway gap to the downside, because the SPYs were gapping below 370. So remember back in after this day right here, and keep in mind this tail is fake, and actually this tail is also fake. I don't know why those tails are there that don't belong on my charts. But if you remember this gap and go on the upside, this was a breakaway gap to the upside above 370. Everyone was talking about an island top, an island top, an island top. Well, guess what? 3 days later, we had a gap and go to the downside below 370. Those are breakaway gaps. So I remember that morning the SPYs give me a very bearish signal, but the IWM not confirming it. The IWM equivalent of SPY 370 was basically IWM 170. And the IWM was not showing that. The IWM was basically showing a large common gap to the downside. That's something that's technically buyable. So I got the SPYs telling me I should be shorting. I got the IWM telling me I should be looking to go long. So these are mixed signals. And the Qs basically, I think it was like 275 was the level, and the Qs were set to open up like right at 275. So again, I got one index telling me breakaway gap to the downside. I should be looking at shorting. I got one index, which has been my preferred index, the IWM, telling me I should actually be looking to buy this potential dip to see if we can give a higher low in the marketplace. And it's just a large common gap in a market that showed some signs of recovery. And I got the Qs opening right at the line, so giving me mixed signals. So that made the very open a little bit tricky. And obviously we broke down hard, we broke down fast. You kind of had an inside 5 and down here as like a momentum trade. I didn't love it. I think I remember commenting at that time that I didn't love the short here, even though it worked out really well. We perfectly called out, I'm trying to remember how, we perfectly called out the low at 10 a.m., the 10 a.m. low for just an extension bounce. And it was just, I'm trying to remember, every single candle at that point had been red. It's 10 a.m. We were approaching, but not yet at the point where the 15-minute becomes more important, and you tend to see 15-minute corrections. The 5-minute was super extended for 10 a.m. and basically was just looking for an oversold bounce at that time and a signal to be able to give it. And I remember looking at, what was there? Yeah, IWM 170 broke, and we were seeing if it could snap back through. But I remember cheating on the long and not even waiting for 170 to break and kind of buying early and communicating that to the team. And then we got a nice bounce, and we got the 15-minute bounce that we were looking for. And then at this high, we called out that you could flip short. And that was off of the 15-minute chart, right? So the 15-minute chart gave a perfect technical bounce, more or less to the ADMA here, kind of created a doji there. And I think I remember off of this candle and possibly off of this candle too, though, would have stopped you out, saying that you could short off of these highs to see if you could get downside continuation off of them. And that's exactly what happened. And then for me, this midday on Friday, I did very little, to be honest. It was just kind of watching how bad the destruction is going to be at that point. And the destruction was bad. Friday was ruthless. Ruthless gap and go to the downside. The breakaway gap to the downside and the SPYs thwarted the potential common gap buying opportunity in the IWM. There were once again no buyers, and it's just been so consistent. I think I said that on Friday also. It's been so consistent for selling on Fridays this year. I've never seen anything like it. For the most part, I've never been a huge fan or huge believer in like things like seasonality, or people talk about like turnaround Tuesday, like Tuesday's the day in which the turnaround comes. And I know that there is something to just statistics, right? And September is usually a bad month for the market, and guess what? September was a bad month for the market. So it's the seasonality aspect of it is always something I pay attention to, but I always pay attention to it with like a really big grain of salt. Just because every single year the circumstances of the market are different, and just because September is typically a month where the market sells doesn't have to mean that this September is going to be a month where the market sells. I mean, January is usually a month where the market gets bid up, right? That did not happen this year. That's for sure. So, yeah, trying to remember what the question was. I know I just kind of went off there. Oh, it was the game plan on Friday. Yeah, so that's pretty much it. I hope it helps Sebastian. Jerry saying that Pat had a great call in Merck at the Open for a long. Okay, nice. Looks like there was some news here. I missed that with my kind of limited research process here this morning. Really nice move in Merck. Good stuff. Hope you guys caught it. AT&T's at 1994 levels, Ricky's telling me. I don't even know if my charts go back that far. No, we go back to 2002. Which I see it above that. Maybe it was here in the 94 also. Oh, 03 and 94 levels. Gotcha. Yeah, it's crazy how ruthless this AT&T and Verizon have been. I honestly, I'm really glad that I don't trade these names, because I don't get it. I don't get it. And I haven't done a whole bunch of research here, but I mean, are this many people really just like turning off their cell phone service because the market's going into a recession? I feel like, for me personally, like internet and cell phone service, I feel like I would turn off my heat and water before I turned off my internet and cell phone service. Like, and I don't know if I'm kidding. I'm really maybe not the. You know what? Turn off the heat and water. I'll go for a jump in the beach for a swim. I'll do Superman plunge every day in the winter, and put a bunch of sweatshirts on or something. I need my internet access in order to be able to trade. I don't know. I don't understand it at all. People are in these companies for the dividend. The AT&T Warner Media tie-up was probably a big mistake for them. But I actually thought that the stock would recover once they spun off Warner Media. And it obviously hasn't. Speaking of Warner Media, wait, what's the symbol? Not WB, it's Walgreens. Whatever. WBD. Thank you. Yeah, the total trash. Amount of debt that this company has. It's, oh man, the new management over there is just so bad. That guy David Zaslav is probably the most overpaid CEO for what he accomplishes or what he doesn't accomplish for his company in that probably the history of the world. It's pretty impressive actually. Cool here. So what else do you guys got from me in the VTF? From Jeff. AMD processor issue is specifically related to the software you use at T3. Yeah, for sure. In general, in the industry, AMD processors are considered to be better Intel processors than Intel processors at this time. Yeah, that's what I've always heard in the semiconductor industry. That's my understanding as well. Just was not my experience, my personal experience with the computer that I bought. But the degree of the selling in Intel is still mind-blowing because AMD and NVIDIA with their PE multiples is a little bit more of a growth story. So seeing growth stories get destroyed the way that they've gotten destroyed in a rising interest rate environment, it makes plenty of sense. Intel's not a growth story, right? It's been the value play of the semiconductors for a while, but this stock has not been acting like other stocks. Like a lot of people pointed towards, like us, pointed towards energy coming into this year as value plays that we could focus on in a rising interest rate environment, and it made for a great start to the year for a lot of us who are long a lot of these energy names at the end of last year into the beginning of this year. If you're pointing towards Intel as being a similar situation as far as being a value stock, well, I guess if you like it at 50, you gotta like it at 25, right? What issues was I having with the AMD processor? It would cause my Lightspeed to freeze. I've been using Lightspeed as my trading software for 12 years. I have never had issues with it. I think it's a great software, and all of a sudden I bought this fancy expensive computer with this AMD processor, and it was consistently causing the software to shut down. And at the same time, I know a bunch of other traders were reaching out to the trade support team who were having issues with Lightspeed, like just shutting itself down, and the only thing that all of us had in common was an AMD processor. From Raphael, can I give my thoughts on Microsoft? I love Microsoft. I love the company. I love what they do. I love the CEO. It seems like it's managed so well. One of my best career names, capturing this entire move basically since Satya Nadella. I'm not long now, but this is a stock that I've been long for almost like the majority of my trading career. Like Satya Nadella became CEO, loved what he was talking about. I loved the LinkedIn acquisition. Love so much of what this company is doing. Stock's just been getting hammered, and totally hammered here. I still love Microsoft. The company's not going anywhere. I think that if you buy Microsoft at these prices, you're going to be making money eventually at some point. I'm confident of it. That's what I really think. If you're like an investor, from more tactical timing on Microsoft. Let's see what this earnings season looks like. Why am I getting all these fake tails in my trading software recently? This Microsoft low is not real on today's daily candle. So Microsoft again. I'm a big fan of it, but technically here it looks terrible. Just like what I was saying with NVIDIA. This also broke a major support area. This 235 is now gone in Microsoft, and it's making new year lows. So do I want to be long it? Yeah. Am I going to come in and catch a falling knife? No. It's getting pretty extended to the downside, so maybe if it gets more extended, I get some sort of, retracement signal. I can come in and go long the stock. Otherwise, prove to me that you want to be bullish again by getting above 235. With that said, I'm way too biased in favor of this company to be able to short it. I just know myself. I can't short Microsoft. I need to short something else. So I'm not going to be getting short it. I'd love to be long it, but I'm not just going to buy these trash technicals as it continues to go down. Prove to me by getting above 235, then I'll look at you again. Or prove to me by getting so extended to the downside that some sort of setup actually comes in. I agree. If Intel could ever fix their manufacturing technology problems, they still have the infrastructure to be a huge player in the foundry space and not based in Taiwan. Could be huge upside one day if they can get their issues fixed. Yeah, I agree. Bring it back in Indy Grove. I didn't hear that. Okay. All right, gang. It looks like I got through all the questions. Approaching 5 o'clock, so I guess I'll wrap it up. Hope everybody had a good day today. There was some opportunity out there if you were really selective and kind of picking your spots. I looked at some of the best opportunity came out. I mean, we called the low in the market today. Big shout out to Pat, though, for getting us that information, and then we were paying attention to the price action at that time. So that was a great opportunity to buy some stock. It's just too bad that if you bought that stock that you couldn't get the close that you wanted to feel confident for upside follow-through. So tomorrow's a new day. We'll see how we gap as we kind of wait for these bigger PPI, CPI numbers Wednesday and Thursday. Have a great night, everybody. I will see you all tomorrow.